Yo, what's up, traders? So just finishing up New York session, or it's not finished, it's still going. It's still going strong. Finished our live call at the accelerator and took some great gold trades today. I want to show you that and show you a little bit of our live call, what it was like. This is actually dollar CAD. I just sent this trade out there to our ROmentum subscribers. They have a channel that shows them specifically trades that I'm taking, and so anybody that watches this, there'll be some video analysis for the ROmentum subscribers that get to see, you know, how and why I took this dollar CAD call. So, but check out gold. So if you want any information on that, click below. You know the deal. So this gold trade, huge breakdown. I'm going to show you us taking it live in our accelerator group, live in New York session. The big thing, the big red flag for me was the fact that we got rejected at this 1800 level. So using ROmentum here, we crossed below the envelope. Here is the 15-minute. We crossed back below the envelope, and you know, we're not even, we're not out of the woods yet, right? We have to get below this 200 moving average here. Then, you know, if we do, and say we cross below on that SMA, and we get across like this with the envelope, and of course the ROmentum is already confirming on the 34. Now if we are to get across here on the 100, that's going to be huge. But we go over here to the 5-minute, these crosses have already happened. So we're below the 200 moving average here. Here is that 1800 level rejection, and the CCI is pointing us lower. And so, of course, where are we heading, right? So, like I said, we're not out of the woods. We are still in an uptrend. We can't deny this, which is the big, you know, diagonal support holding us up here, that we're going to need to clear in order for this breakdown to really pick up steam. But if and when it does, you know, we're going to be looking at these imbalances down here as our targets, which is, this is 1750, right? So the target that I have on this trade is 1770. That is 180 pips from where we are now. So I'll be happy to take profits there if that pans out. You know, we're below this envelope, confirming across multiple time frames here on the 5-minute time frame. So this is a great setup. Check out us taking it live. Super exciting. And you can see this, like, you know, it's one thing for me to just show you in retrospect what happened, but it's another thing to see it happening as it's happening live. And you can see how I kind of put together the pieces in this video. So enjoy the video. Peace. See gold here. It's a gold trade. Looks good. Retested envelope there. So, I mean, the thing is with the envelope, as long as we're holding it below there, that's what I like so much about it. I can feel pretty good, which I'll tell you why. I exited pound dollar, which, you know, I played it safe, right? Because it was the Asian session, and we had this little break above the envelope here. And so it's Asian. I was like, okay, well, you know, it sucks when you're sending out the signals and trades and then you wake up and it's like, stop loss, fuck. Because then it's like, that's what you know, what I'm starting the day with. So it's a lot of times I'd rather just be like, if a trade's still on after I send it, just close it out so I can just kind of start with a fresh slate in the morning. But I mean, obviously I wish I held, but so this is the thing, right? So like, for gold, you know, if we break above the envelope, that's like the time that's like, well, how long do I want to stay in here? But it looks good now. There we go. There we go. Cool. Never mind. Forget everything I just said. We're good.
yeah, it's doing all right.
Yeah. Yeah. Sweet.
That's what's nice about gold. When it breaks, it really breaks, doesn't it? It just goes.
Yeah, it's great when you're on the right side of it breaking, that's for sure. But yeah, that looks good.
Where do you think he's going down to?
Well, you know, so I mean, the fact that like I like gold, I do like trading the commodities for the simple fact of like we have those mental and logical targets, right? So like
Aye.
if we, because it's easy to wrap your head around, oh, okay, the price of gold just got, I mean, it's so supply and demand driven, right? So like it just got shut down at 1800, right? It didn't break 1800, so the market is saying no, we're not going to pay for it at this price, and you know, pushing lower. So the fact that there's a rejection there at 1800 tells me that, you know, we could be headed for a significant move lower. So, or you know, by significant, you know, I'm saying 1770 seems like a pretty reasonable target.
Serious from here.
And so the same thing with oil. It's like the same. That is why I like to trade it, or at least watch it, because it's like, oh yeah, $61 a barrel. This is getting pretty high. So I mean,
It is, yeah.
you know, I wouldn't be surprised if we're at $100 a barrel by the end of the year. We'll see. Hopefully not. Hopefully not. But you know, it was nice when it was down here at, you know, 20, and gas was like cheap. But so anyways, all that aside, it's nice to, because you can wrap your head around, okay, so you know, $61 a barrel seemed like it'd be kind of a median average price. You know, it's not like I'm an oil so intricate, but it's a great example of like supply and demand. You know, you could go over to coffee, and I don't know, what's the coffee? Price of coffee. I don't know, maybe I'm getting out of my, but you know what I'm saying? Like, it's better. It's good to wrap. It's hard when you think about something like US dollar NOK. How much what's the value over the you know, Norwegian krona over the US dollar? You know, because it's just kind of numbers. But when it's something that you can hold, like gold, or you know, being at 1800, geez, that seems pretty high for an ounce. It makes a lot more sense, and that's a great way to just kind of approach. That's a great way to just supply and demand. That was weird. That's a great way to approach supply and demand, because you can think about, oh, okay, what is the market willing to pay at this price? Are they willing, you know, is the dollar too high right now? Is the pound getting too strong at, you know, $1.40? And once you kind of look at it that way, it's like, yeah, okay, so the market is having a lot of trouble here at $1.40. So we might have a lot more trouble breaking this 1.40 level and pushing higher. So kind of a ranging in between 1.40 and 1.20 over a 2-year period seems pretty likely, because the market just kind of priced in what it's willing to pay for each at each point. So does that make sense? So I just kind of went on a little rant, but once I started, because supply and demand, you're like, oh, okay, because like Cameron really just trades off supply and demand and has wrapped his head around what the market is willing to pay for something at a certain price, and then seeing what the market reaction is at that price, and then getting his entries based on that. So, you know, I like to do my best to think logically about those kind of things.